Nvidia just posted the most insane earnings report of the year. Sales up 60%, profits up 60%, revenue guidance of $65 billion, crushing expectations. CEO Jensen Huang said sales are off the charts. Then he looked at everyone freaking out about an AI bubble and basically said, chill out. But here's what Wall Street did. The stock ticked up for 30 minutes, then crashed right back down. Closed Friday down 1% despite crushing every single metric. That tells you everything you need to know about where we are in this market cycle. Nvidia's CFO tried hard to convince investors. She said AI infrastructure spending will hit $3 to $4 trillion annually by the end of the decade. She rattled off customer wins. Meta's AI recommendations are working. Anthropic expects $7 billion in revenue. Salesforce is 30% more efficient using AI. She even pointed out that Nvidia's chips are now powering non-AI cloud computing that represents hundreds of billions in spending. So even if the AI hype dies, Nvidia still wins. Wall Street analyst Dan Ives from Wedbush said, quote, "This is not a bubble. It's year 3 of a 10-year build-out of the fourth industrial revolution." But the market didn't care. The stock fell anyway. Why? Because nobody believes the story anymore. Not because Nvidia's lying, but because the math doesn't add up. Tech companies are spending $400 billion this year on AI infrastructure. But OpenAI's CFO literally suggested the government should backstop their debt because they might not be able to afford their commitments. Think about that. The flagship AI company that everyone's betting on just hinted they need a bailout to keep building. And Nvidia has invested directly in OpenAI and Anthropic. The companies that are their biggest customers are losing billions of dollars. Nvidia is essentially funding its own revenue growth by investing in unprofitable customers who buy their chips. That's not sustainable. That's a circular funding scheme dressed up as an AI revolution. A senior portfolio manager at Synovus Trust said these concerns weren't put to rest by Nvidia's earnings. They were just, quote, punted to next quarter. Translation, we're kicking the can down the road. Nobody wants to admit the emperor has no clothes yet. So here's where we are. Nvidia keeps posting monster numbers. Jensen Huang keeps saying demand is insane. But the stock can't hold gains on good news. When the best earnings in tech can't lift the stock, that's your signal. The market is telling you it doesn't matter how good the fundamentals look today. What matters is whether this spending can continue for years without generating real profits. And right now, nobody knows the answer to that question. 3 scenarios from here. 1. Tech companies prove AI generates massive returns. The spending pays off. Nvidia was right. Stock doubles from here. 20% probability. 2. Spending continues but slows. AI becomes useful but not revolutionary. Nvidia grows but at normal rates. Stock stays flat or slightly down. 50% probability. 3. One major AI company collapses under debt. Spending freezes. The AI bubble pops. Nvidia falls 20 to 30% as the poster child of the mania. 30% probability. Jensen Huang told everyone to chill out. But when your stock falls on the best earnings report of the year, the market is telling you to worry. Comment 1 if you think this is a buying opportunity. Comment 2 if you think the AI bubble is real. Comment 3 if you already sold your tech positions. Because right now, we're watching the world's biggest company try to convince investors there's no bubble while the stock price screams otherwise.